Groww as a company, I've seen it thrive from being a private startup and now what heights it's reached already.
Groww as a group is like the Billion Brains Garage Ventures, which is a listed company. The challenge we knew was that there are not sufficient investors in India. While there is a lot of demand, but there are a lot of hurdles to basically become an investor. We solved for that by launching a tech product. We solved for onboarding, we solved for transactions, we solved for payment flow. Now, a lot more people are participating in equity market. As I said, from a number perspective, 2015, 1 crore investors in mutual fund, now close to 5.5, 6 crore investor, right? So 6x industry has become in the last 10 years.
While people are taking very heavy bets on equities, I often get questions, would you buy gold or silver today? When do we know when to exit?
You can always look in the hindsight in the rearview mirror and say, oh, I missed the bus. No one knows what will happen in the market. Gold has given 100% return in the last 1 year. Silver has given 289% in the last 1 year. US markets, Nasdaq has given 20% return in the last 1 year.
So what is the right way or right mix to invest in these commodities?
From a pure equity perspective, if you ask me, I would suggest that if you are investing now, don't have any horizon of less than 3 years. It's ideal to actually have an horizon of 5 to 7 years.
This whole international theme of investing. Now there are so many fund houses that are launching gift city structures or promoting international investing.
US market is at $60 trillion in market cap. We are at $5 trillion, so we still have a lot more room to grow. But they have some companies which have very good bones, very good long-term structure potential. So it's always good to have some exposure to markets.
So what is the right way or right mix to invest? Hello and welcome everyone to the India Opportunity Show. I'm your host Shrishti, and today I'm joined by Varun Gupta, who's leading Groww's AMC business. He's had a fantastic journey in the markets. He started out being a tech entrepreneur and built a mutual fund distribution business, which was later acquired by Groww. And since then, he's been channeling and fueling all his strength into building Groww into becoming the largest stockbroker in the country with over 2 crore investors. In today's conversation, we talk about asset allocation, portfolio construction, how to think about investing across different themes such as defense, railways, as well as hospitals, which is something which I found very interesting and we haven't covered on the show before. As someone who's witnessed the psychology of retail participants, Varun shared some fantastic nuggets on what to do in this kind of a market environment, especially with the gold and silver rally and equities not performing. So you get to hear from someone who's seeing this behavior day in and day out and is guiding and advising his clients on a daily basis. This conversation was a fantastic eye-opener and I learned so much from it. So I hope you enjoy watching. Hi Varun, welcome to the India Opportunity Show. Thank you for joining me here today.
Thank you, Shrishti. My pleasure.
And congratulations on the IPO. You know, Groww as a company, I've seen it thrive from being a private startup and now what heights it's reached already. And what a phenomenal IPO journey as well. Let's talk about, for the audience to understand a little bit more about how Groww is structured, because obviously there's Groww as a product and then the AMC business which you are building now. So it would really help the audience to understand how you are looking at things going forward.
Sure. See, Groww as a group is like the Billion Brains Garage Ventures, which is a listed company. It has multiple subsidiaries under it. So there is a broking arm, which is Groww Investec. Then there is AMC, which is a separate entity. Then there is a lending arm, which is a separate entity. So there are some entities, some subsidiaries like this, but these are the three core businesses we are in, which is broking. Then there is AMC, and then there is lending.
Right. And, because of the recent IPO, there was so much media hype around it. I think it's been one of those companies which honestly didn't disappoint retail investors, right?
Luckily.
Yeah, because so many of the startups which got funded, a lot of them didn't serve the retail investors in the best way. So how has the team been feeling behind the scenes?
So you were very nervous at the time of the IPO. Like, of course, one thing which we really did well, I think most credit to our founders and, to our merchant bankers, that we priced the IPO well.
Yeah.
We always wanted to leave some money on the table so that, whosoever invests with us, whosoever buys our share, get benefited out of it. But the kind of response which you receive from the market, honestly, personally, if I have to call it, it's like surreal. Like I was in my wildest dreams, I was not expecting that this will be the kind of response. And it's always for us as entrepreneurs is always, very humbling to look outside and know that how people think about it. Like, so it's a kind of a validation for us,
Yeah.
how our share price surged and how the response from the market has been. But also it was, surreal is the only thing which I can think of.
Talking about leaving money on the table for retail investors, I think, you really cracked the pricing right in one sense, because obviously the market cap being what it is, over a lakh crore now. But I remember Groww when, it was just backed by Peak 15 in its early days and very, very initial traction, right? But now how the market has evolved, and rather the retail market has also expanded. Can you talk a little bit about the retail market expansion that you've seen personally?
Sure. See, when we started Grow early in 2016, I will talk more from a mutual fund perspective.
Sure.
The number of investors in India was about 1 crore. 2015, 2016, it was not considered a very glamorous industry, not considered an industry where you do a startup in, right? Like it's usually was a very slow, where more financial services, age old, like legacy companies basically comes. But we realized what we were thinking at that point of time, that there is a demand, but the problem is that there is no company which is completely focused on customers or focused on investors and trying to solve their problem. That was our single core principle. Like, and everything else evolved around it, right? We started in 2016, actually started in 2016, but we launched our first product in 2018. Right?
Right.
Like that journey, people see Grow now, but you didn't realize the first 2 3 years where we spent just experimenting, trying to understand what do we have to do, right? So when we launched, say, we launched a goal-based product, right? Goal-based investment
Yeah.
product, and we ran and we realized, yes, people want advisory, but this is not a business which we will be able to do at scale, right? We started off with regular mutual funds. It's not a very common knowledge.
Yeah.
But in mid of 2018, we realized that, okay, if we want to do things at scale, the challenge is that there are not sufficient investors in India. If we want to solve for getting more investors in India, we have to create a very simple platform, remove all the frills and whistles, create a simple transaction platform with simple onboarding, and solve for all those inefficiencies and educate users that you can now invest. This is a trusted platform, solve for everything, solve for all regulatory issues, solve for all onboarding, all payments, etc., so on and so forth. That is what we created, and that has worked very wonders for us, right? Like 2018 mid, we changed to it, and by 2020, we were already the largest mutual fund platform.
Yes.
And then we launched stocks, and there was already a lot of latent demand from our investors who were mutual fund investors, right? So that it just kept on growing from there. So the core principle for us remained the same, always in all the businesses we do. You identify who is the core customer you are solving it for. In this context, it was the end investor, and we created everything which the end investor wanted, and now we are seeing the benefits of it.
Like I was just telling you, like, my SIPs happen on Groww, and so do my stock SIPs, which I thought was a wonderful feature, because you guys have really focused on the features that investors will like and personally love, right?
Yeah.
So, I can imagine that that's the case for a lot of investors. That's why you've seen the kind of growth that you have.
Yeah. See, we basically we of course have one of the best product people, tech people, business folks in the industry. But one thing which we always believe we did right was to continuously keep listening to our customers, right? And this is what we do in all our businesses, right? Like here, all these features which you're seeing is not something, some of those are innovation by us, but most of them were demand from customers. Right. So when we were launching mutual fund, we were very big in mutual fund. Customers came and said, oh, we want to now invest in stocks. So we launched stocks. Then in stocks, they came and said, okay, we want a stock SIP. So we launched stock SIP. Recently, some investors came and said that we want to launch MTF. So we launched MTF. And so on and so forth. Our product pipeline will keep on going. The same case is happening in Groww AMC, which is the business which I take care of. Here we have defined that our customers are two, which is the end investor and also the advisors which are in India, right? The mutual fund distributors slash investment advisors. So we are building for them, and from the last 2 years we have been doing so. We have been scaling well, and I think the same principles are following in other lines of business also for us.
Yeah, help me understand that a little bit more, because for a lot of people, especially retail participants, their investing journey into equities starts with a distributor that
Yeah.
might be a relative or someone that they know personally, and that's how my father also got initially started back very early on. But so it's usually a distributor who helps you onboard your journey into
Yeah.
equities.
Yeah.
Before it became mainstream like it has today.
Yeah. Yeah.
But what have you solved for distributors, which is fundamentally so different?
Sure. So for distributors, we are solving it in AMC, but I will answer that question from our overall thought process.
Sure.
See, when we started in 2018, when we launched our product in 2018, the challenge, as I said, the problem was that there were not sufficient investors in India. The markets are deep, but their participation was very low. So we realized that the way to what there was latent demand. So we solved by creating a very simple online platform. What it helped was, of course, COVID was also a booster, but what it helped was to simplify the whole journey of investment. And because of that, lot of people onboarded, lot of people started investing. With 1 crore investors then to now about 6 crore investors now.
Yeah.
Industry has grown 6x in the last 10 years or so. But what is now lacking in a way is many of these investors are now looking for advice, right? And see, there are a segment of users who will invest DIY, will be able to create wealth DIY. I believe it's about 5 to 10% of overall investors base. The challenge we knew was that there are not sufficient investors in India. While there is a lot of demand, but there are a lot of hurdles to, basically become an investor. Now, we solve for that by launching a tech product, right? Groww app is basically that. We solve for, as I said, we solve for onboarding, we solve for transactions, we solve for payment flow. There are a lot of corner cases like how do you get your refund, etc. We solve for, and so that became mainstream, and now a lot more people are participating in equity market. As I said, from a number perspective, 2015, 1 crore investors in mutual fund, now close to 5.5, 6 crore investor, right? So 6x industry has become in the last 10 years.
Yeah.
But what we realized in India, or that for you to create wealth, right? Like the purpose of investing is to create wealth over a long period of time. That via DIY, about 5 to 10% people will be able to do it and will be able to do it well. But most investors in India, or many investors in India, require handholding. Just to give you some data, like US market is 40 times bigger than India, right? India is about 80 lakh crore, about $1 trillion.
Yeah.
US is about 38, $39 trillion. 76% of US AUM is still under advisory. Right?
Yeah.
And they are much more financial literate country than ours. While in India, we believe it will continue to remain the same. The change, the way it has happened in US was slow and steady from 1970s when 401k was launched to now. But in India, it happened much faster with technology, like the way usually the other things happen, right? India is a late adopter, but very fast adopter.
We've leapfrogged.
Yeah,
in
we
one sense.
leapfrog.
Yeah.
Now, the idea is that how do you get this customers who need advice connect with the right advisor? So in Groww AMC, we are working very tediously to create the right advisor network in India. To scale up the advisors, to scale up the mutual fund distributors slash advisors who already exist, bring them to this new age, right? Customers are waiting for them, investors are waiting for them, but are they ready? So this is the way we think about it. We have created multiple programs around it. Like we have done something called O2O, which is offline to online workshop. Many of these distributors do not understand about how do you go about creating your brand online. So we help them do that. They are not digitized. Like now, end customers want an app, right? So do they have an app of their own? So we have created that, and so on and so forth. We have done a lot of innovation there, and that is what we are focusing on in Groww AMC.
That's amazing, because I remember, I won't name the competitor, but I remember even onboarding for them, I had to sign like 50 pages of paper while we were onboarding. But for Groww, it was very seamless. And even what you're talking about, the distributor network, right? Because a lot of retail participants are still dependent on these advisors to help them build and, even control their emotions during, say, the market's performance, like it has been in the last 1 year.
Yeah.
When there's a sideways market, retail participants are always questioning that, should I withdraw or do I not withdraw? Do I stay invested? Do I continue my SIPs?
Yeah.
What are some of the most interesting insights that you've learned about this behavioral finance overall? Because I think managing psychology in investing is more than half the game, right?
Yeah. See, one of the biggest change which I feel has happened now is that customers are significantly more aware. Which is very heartwarming for us, because this is where we have been working towards to create more awareness, to give more education. So I believe that education is still happening over a period of time. Like more and more customers are getting as educated as they would like to be, but awareness have increased drastically. So just to give you some example, I'll give you example from our ETF, right?
Sure.
Now, silver is surging.
Yeah.
Right. And anytime we see a heavy increase in silver, that is the day we see net sell in Groww silver ETF.
Really?
Right.
Okay.
Whenever silver goes down, that is the day we see net buy. Right. So customers want to invest, but they now also understand what pricing they want to, what price they want to buy it at. From a mutual fund perspective, the kind of conversation investors have with their distributors have changed drastically, right? They are aware of their own. They know that there is something called asset allocation which exists. They know that there are different type of equity funds which exist. They know that there is a hybrid fund which exists. There are different thematic themes in which they can invest in their satellite portfolio. There is power, there is defense, there is railways, there is hospitals. So they understand all that. So conversations have also changed. So that is the larger change which I am seeing. So awareness have increased. But one very, very unique feature which we believe about Indian market is, as we say in Grow ads, right? ये market सबका है. So Indian customers are very, very varied, right? There you will find a significant bunch of DIY investors. You will find a significant bunch of just stock investors. You will find a significant bunch of investors who want advice, right? So you in India, there is no one single thing which will work, right? If you want to create a whole fledged financial services company, you want to be present in all the markets, right? So that is what we are basically now going towards. As you would see from our subsidiaries, it's basically broking, then we are launching our own manufacturing, then we have our lending, right? So their customers needs very, very drastically depending on where they are geographically also, what a life cycle they are at, what are their goals. So depending on that, you have to be present everywhere. And India is a very, very diversified market. This is the major learning we have had, in the last 10 years. And of course, at the same time, we are very glad that at a macro level, they are much more educated, much more aware now.
Yeah, here I'll ask you a question that startup founders often ask. That, it's usually investors will tell you that identify one core segment and solve for their needs and go very deep into that, right? But because the Indian market is very varied, like you were saying, and there are all sorts of investors, how did you approach that?
See, Groww, we did exactly what you were saying, right? We said that the core segment in India is who wants to invest, but they don't have ready access to investment, but they have a good inclination towards investing. They want to invest, they want to grow their money. They have understood that FD or savings account is not the right proposition anymore, right? So that is the problem statement we solve for. And you have seen the kind of growth, right? Out of the 6 crore investors, 1 to 6 crore jump, majority of them have come through online platforms, and led by Groww, basically, in a way. So that is what we solve for. But now that we have taken that leadership position, I think our responsibilities are significantly high, especially in Groww AMC. We believe that the investors now exist, right? And Groww will continue to expand the investor base, or online platforms or offline through also. Investors will continue to come. But this wealth creation, some of them will be able to do on their own, like I said, 10% types. But for remaining, we need to create an infrastructure so that they can be handheld in creating that kind of wealth, right? Long-term wealth creation. That is what we're working towards in AMC.
Yeah, makes sense because, I think while people are taking very heavy bets on equities, sometimes now, I often get questions, and this is across my family members and relatives also. They're like, would you buy gold or silver today? Or like, when do we know when to exit? Or how much should we go back into equities? Because some of them pulled money out of equities in the last year because it wasn't performing. All things that you shouldn't be doing. But, there are these questions on everyone's minds, right?
That's right.
So I think let's address this portfolio construction a little bit in terms of, since the equities haven't delivered in the last year, people are questioning, should we be overweight equities, underweight equities? How would you suggest or advise people?
See, we again, as I said, it's like I would say it's purely a role of financial advisor because each investor needs differs very differently from each other. What life cycle they are at, what their goals are. But general, if you ask me from a uber macro level perspective, I usually suggest from a long term investing from a 5 year plus kind of an horizon, you should have 70% of your portfolio in core equity funds, which are diversified equity funds.
Right.
10 to 15% you should have it in commodities because as a hedge against equity downfall, as a hedge against inflation. About 5% you should have it in US stocks or internationally diversified if that's possible anymore. And about 10% you should have it in thematic funds or like the themes in which you believe there can be long-term growth potential, right? Which you can discuss with your advisor. You can also do your research, but invest in those themes where you believe there is a fundamental change which is happening, right? This themes only 10% here because these themes are of course prone to more volatility because these are more thematic, more sectoral in nature, right? So for example, themes like railways, defense, power, hospitals, these are very, very like there is a structural change which is happening in most of these themes. So this is usually the broader construct which I look forward to. Now, inside the equity portfolio, let's say a customer, equity slash hybrid, I would call it.
Yeah.
But let's say a customer is much more risk averse, right? So you would go more hybrid, more multi-asset funds, more large cap oriented funds. If a customer is more, more risk oriented, then you will go small cap funds, mid cap kind of funds. But and also the equity proportion might change a little bit. But usually this formula has helped a lot more investors. Again, I would put it with the caveat that please consult your financial advisor.
Of course.
And depends a lot on where you are at. But generally, this formula works for most of the investors which I have seen.
Yeah, like because I was just telling you that, the audience for the show is more sophisticated investors. They might have, seen market cycles and they've been investing for some time. So in terms of like, this is still a very equity heavy kind of approach, right?
yeah.
But then people are left with the feeling that, we didn't benefit from enough gold and silver,
Yeah.
right? Or I met someone yesterday who was telling me that, I called out the gold and silver rally last year. So I sold all my equity holdings and I put it all in gold and silver, which I don't advise anyone to do. But, how should one think about missing out on certain rallies like these, for example?
See, the way we think about it, that wealth creation does not happen just purely by trading, right? So if you are able to take a call that, okay, if you understand, okay, the equity market will underperform this year, let's say you are that good an investor, then still don't go overboard. Like don't sell all your holdings and put it in gold, right? So I'll give you one example. Out of my entire mutual fund portfolio, only about 10% I put it in gold, right? About 4 or 5 months back, my ETF portfolio is different, my equity portfolio is a little different, but only about mutual fund portfolio. In this 6 months, so my general XIRR has been between 12 to 15% lifetime.
Right.
And because of the gold rally, just because of that 10%, my XRR is right now at about 25%. Right? I didn't put it in silver because silver I will invest in ETF. I will not invest in gold. Currently, the return expectations are very, very high. It has to be anywhere between 12 to 18%, usually is what you like to do. This is how you double your money in every 5 to 6 years.
Yeah.
And with that, if you want to target that, then do a more diversified portfolio. See, no one knows what will happen in the market, right? Like gold has given 100% return in the last 1 year. Silver has given 289% in the last 1 year. Equity Nifty 50 has given about 9% return in the last 1 year. So Nifty 50 has not performed so much.
Yeah.
US markets, Nasdaq has given 20% return in the last 1 year. So you can always look in the, in the hindsight, in the rear view mirror and say, oh, I missed the bus, right? But you don't know what is going to happen in the next 1 year. So it's better to remain diversified. What if equity, goes up from here in the next 12% and commodities do not perform so much, right?
Yeah.
So do asset allocation at your end. If you don't know, then invest in good multi-asset allocation funds because they are doing it for you. Understand their theories. Many AMCs are running very different multi-asset funds.
Yeah.
So understand their theories. Consult your financial advisor, but don't go overboard just because of your conviction, because that if you'll go right, sometimes the chances of you going wrong are more,
Yeah.
right? And you don't want to lose your wealth creation opportunity on just some few calls.
Yeah, absolutely. And when people are thinking about investing in gold versus silver, like you were saying, they can do ETFs, they can do direct gold products, and
Yeah.
there are so many products that AMC is also launching, right?
Yeah.
So, what is the right way or right mix to invest
Yeah.
in these commodities?
See, are you asking where we should buy gold, physical gold or gold ETF?
Yeah, like, because
Yeah.
people are still asking me all the time that
Yeah.
is this the right time to buy? So let's answer that question
That
first, and
the
then
timing.
how
Okay.
should they buy
Yeah.
can be
Yeah.
addressed later.
See, from a usual portfolio creation perspective, I believe that 10 to 12% should be in commodities. I have advised my customers, some of the clients which I used to handle before, and people in my family members. But now it has run up so much that if you're doing a portfolio allocation right now, don't buy it in lump sum, right? Do slowly phased out. There is a lot of, what should I say? Sentiment also around it. There is a lot of momentum because of which commodities are also rallying. There are also fundamental factors, of course, like there is a lot of geopolitical tension. Central banks are buying. US dollar is weakening, and
Yeah.
money is moving to safe haven. Silver has a lot of demand in terms of industrial demand. Just one fun fact. So, from the last 3 years, silver demand has always been higher than silver supply, right? But silver has not run up in the last 3 years. We launched it in this year, May, silver ETF, knowing that this opportunity exists. But in our wildest dream, we didn't know that silver will become 3x from there.
Yeah.
We launched it at NAV of the 98, and now I think it's about 340, 350.
Wow.
Right? So we of course never judge that, but what happens in this kind of rallies is that a lot of traders start participating, a lot of margin money start coming in, so. And silver traditionally has been a very volatile asset,
Yeah.
right? It can go up and it can come down with the same rate
It
of
can see
speed.
60-70% drawdowns also, right? So
10% drawdown in a single day is not
yeah.
is not a question mark for silver. So while silver use it, so you should have commodities exposure, but if you are doing that commodities exposure now, I would suggest don't do lump sum, do it in a more phased out manner. Create that over a period of time. If there is any kind of volatility which exists, even in positive or negative, both will work in favor for you, and do it in a phased out manner. But have that from a long term perspective, have that kind of an asset allocation. But best is to consult a financial advisor because
yes,
they,
we will definitely put that disclaimer, and we put it
yeah,
for all our episodes because this is
yeah,
not financial advice, of
yeah,
course. But these are genuine questions that people have been asking me, and
sure,
I am also personally thinking about some of these things. So, for
sure,
example, when we're talking about asset allocation, right? I always followed this rule of like having 10 to 12% in commodities or
yeah,
precious metals in one sense. But now people are dealing with this problem that the returns have been so good that they have become an outsized size of the portfolio, right?
right,
So the asset allocation has gotten skewed.
yeah,
That
yeah, makes
from a
sense,
size of the volume,
yeah,
like
yeah,
it's actually gone up
yeah,
more than what you would usually peg it at.
yeah,
So how does one deal with that? Do you start buying more equity to balance
yeah.
it out, or how do you think
No,
about that?
that's a very good question. That's a very relevant
Yeah.
question. So there are two ways in which you can handle it. One is that you just buy and hold, right? You don't touch your portfolio, you don't sell. And the second way is you start trimming, right? You don't add more. There's the
Yeah.
third part which you don't do. So usually it depends on the risk appetite of every investor. For example, in my case, gold I have held, silver I have started trimming, right? That is particularly for my case. And even in our multi-asset allocation fund, we have started trimming on silver because mutual fund we are looking to create a long-term wealth, right? The point-to-point return in MAF should be decent, so
Yeah.
we don't want to take a over-indexed risk at any in our portfolio. But gold we are holding, right? Gold we are still actually, in fact, we our proportion for gold has increased because of the price increase, but we're still holding. We are not trimming. The idea is that gold is lesser volatile than silver. There is still a lot more fundamental levers for gold to go up. Silver, there is still a lot more. While silver can go up in the in the medium to long term, but in the short term, we see that there can be some pressure on silver. There is a lot of speculation in silver. A lot of
Yeah.
margin money is coming in, and if it starts going down, it can just keep going down. But that is more from a risk-averse mutual fund investor.
Yeah.
If you are a very risky investor and you would like to take risk in a portfolio, again, consult a financial advisor. You can continue to invest in good, but I would not be able to. So we are a mutual fund house. We like to create wealth in long term, and we will always have risk return as a fundamental. How much risk are we taking to generate what kind of return? That always guides our thought
Yeah,
process.
absolutely. Because, like you said, de-dollarization is a big theme
Yeah,
which is yet to play out. Well,
yeah,
people have been talking about it for the last 2, 3 years, but I don't think we know fully what will happen
yeah,
once, people realize that money from social security accounts has been wiped out and the US can't pay
yeah,
its debt payments
yeah,
either. So, it's like real risk that we are all sort of wondering that, when is the music going to stop?
yeah.
What do you think in terms of market returns or expectations? What are good expectations to have overall, knowing that, we are in the midst of so much risk and geopolitical uncertainty?
See, again, risk is a so these are tough questions, honestly, and returns are a factor of what is the time period you are looking at. There are speculations what will happen in the next 1 year. Anything can happen. But from a pure equity perspective, if you ask me, I would suggest that if you are investing now, don't have any horizon of less than 3 years.
Yeah.
It's ideal to actually have an horizon of 5 to 7 years,
Hmm.
right? And do it in a phased out manner. Actually, equity is very good right now. You can also do, depending on your risk appetite and the kind of fund you're selecting, you can also do lump sum. But especially in commodities, do it in a phased out manner. Do STPs, and that is better right now. See,
Hmm.
it always this is not the first time I am hearing this question, right? Whenever market run up and
Yeah.
there is slightly a downturn, people start questioning, right? Because most money have come at the top, but
Hmm.
this time it's different. As I said, the customers have become significantly more aware. While customers are worried what is going to happen, investors are asking question, where should I be investing? But most SIP book have not gone down in the industry.
Hmm.
Right? People are continuing to invest for long term because this understanding of equity will generate long term returns have stayed. We have seen a 30-year cycle in which this has done so for Indian investors,
Yeah.
and people are also aware. So we are confident that we are in a growing phase. There will always be a short-term troubles and something or the else can happen, and that is the best time to invest.
Hmm.
Right? So continue investing in a phased out manner. Do not stop investing, but understand which assets you are investing in, what is the duration you are investing in for, how much risk you are taking.
Yeah, I think, one also globally important factor is that, when everyone is underweight India, that's potentially a good time to invest also, right?
Yeah,
Because
yeah,
we are not the
absolutely.
flavor of the month or year
Yeah, yeah.
in one sense. So,
So
like, this is a good time to buy in
yeah,
one
so if
sense.
in fact actually if you ask us, this is what we try to do in AMC, right? We
Hmm.
try to launch products at the time when people are not talking about it.
Yeah.
So the recent fund we did was small cap fund, right? The small cap has been completely out of flavor.
Yeah.
People are not investing in small cap anymore. But we believe that the valuations have corrected so much, and there are many good stocks which are available at so attractive valuation that
Hmm.
it is the best time to launch a small cap fund. And whosoever will invest will do a good job. Like we will be able to do a good job for them in the next 5 to 7 years, right? So
Hmm.
this is what our core thinking is, that where the opportunity exists, that is when we try to launch the fund
Yeah,
for our
absolutely.
investors.
Because once it becomes popular,
Yeah,
once the
yeah,
theme picks up also
yeah,
in the market, that's
yeah,
not the best time to
yeah, yeah,
invest. But like most of the products are launched around that
yeah,
time. But I
yeah,
think you guys have launched before it becomes market news in one sense.
yeah.
So,
Hopefully.
yeah. And you were talking about thematic funds as well, right? Like keeping a 10-15% allocation towards that.
Yeah,
So let's talk about some of the interesting themes that you are seeing. Are there
yeah,
any interesting, like you said, small caps, because obviously they were really brutally
yeah,
beaten down.
yeah,
I think 40-50% drawdowns in a lot of portfolios. But now I think there are some buying opportunities, even though some of them might still be richly valued
yeah,
and room for correction. But I think overall the sentiment has improved,
yeah.
right? And now, if you think about themes, what are some of the themes on top of your mind?
Sure. So see, let me actually give a little long answer to this,
Sure.
right? See, we believe that customer risk profile versus the kind of assets they invest in are like in this cycle, right? So there is a
Hmm.
mutual fund investor who is low risk and medium to non-neutral type of return. Then there is an equity investor who is a very high risk and who is trying to chase a very high return.
Hmm.
So what we have done is that between this, we have tried to capture a lot of thematic. We have tried to capture this demand of thematic investment and bring those equity investors into this category of thematic funds where you can basically manage your risk. To give you one example, there are a lot of people who invest in railway stocks,
Yeah.
right? But we said, okay, in railway stocks there is IRFC, there is RVNL, there are a lot more stocks which are not just the risk in the stocks are not just because of railway growing or anything happening in railways, but anything happening in that particular sector as well, right? There is an NBFC crisis, IRFC will go down. So you are
Yeah.
taking those risks and you are not aware of what will happen in the market eventually. So if you are confident about railway as a theme, why don't you invest in a railway ETF or railway index fund? So that is where we believe that there is a lot of opportunity which exists, and we have innovated a lot in this category. So we have launched India's only railway fund. We have launched India's only power fund. Recently, we have launched a metal ETF. Right. So those are the different themes we believe in. From a long-term perspective, I believe, and a lot of themes we have captured, like defense we have captured, EV we have captured, railways as I talked about, power, metal, and the latest theme which we are very excited about is hospitals. Right.
Okay.
So hospital saw a very big run up post-COVID, but now the valuations have corrected.
Yeah.
But we believe that this is a strong structural theme which is emerging in India. This index we created with the help of NSE. We'll be launching our first fund on that. We are the only the only fund will be from Groww AMC. And the idea is that this has all the hospital stocks in India, right? So there are 16 hospital stocks which are listed, and that is where we believe should be a part which investors can consider. This is something we believe can create from the satellite portfolio. This can be a part of a satellite portfolio for a smart investor, and has a good long term, good bones from a long term growth story.
Very interesting. Help me think through, how you think about multiples in the space.
Yeah.
Because obviously, like hospital stocks did run up a lot through
Yeah,
COVID.
yeah,
And
yeah.
obviously, because, there was this whole trend towards people going to hospitals a lot more, but wellness and health becoming a very core theme,
Yeah,
right, on
yeah.
people's minds.
Yeah.
And that's why hospital stocks were rallying. But then there was a compression.
Yeah.
So at what point do you decide that this is a good space to enter?
Yeah.
What multiples would make sense, like in terms of PE multiples? What does that
Yeah.
framework look like?
Yeah. No, very, very interesting point. See, what we saw after COVID was, so just to give you some point, right? So there are 16 stocks in this portfolio. Their revenue in 2020 was about 32,000 crore of all this all these companies put together. That revenue is close to 60,000 crore. Now it has only doubled. But the profit in this 5 years has become more than 6 times or around 6 times, from 1,000 crore to
Really?
6,200 crores, right? And that is because the lot of operational efficiency of the stocks have started kicking in. See, hospital stocks are largely so. See, every stock is very different. There is Fortis, there is Apollo, there is Max Healthcare, there is
Yeah.
Yatharth. A lot of stocks and very different, dynamics. But if I have to talk at macro level, there are only two things which are important for a hospital to be successful, right? What is the occupancy rate? How many your beds are getting occupied, and second is RPOB, which is average revenue per occupied bed. Now, usually the hospital cost is 60 to 70% is fixed, right? And the if you are able to do 30 to 40% of occupied bed, you are able to generate that kind of fixed cost easily, and anything over and above that is basically a profit.
Yeah.
What we saw after COVID was there was a high increase in number of occupied beds and also a significant growth in RPOB, right? Because there was a lot of discretionary procedures which got postponed, and a lot of health problems because of which people started coming in. That continued till 2024, right? And there was a significant, like usually in RPOB you will see a kind of growth of 6 to 8%,
Yeah.
but you started seeing a double-digit growth, right, in most of this.
Interesting.
So companies, market also gave a lot of multiple. They estimated that, okay, this kind of growth will continue to remain, right? And there was a rally after COVID. So that is where, the kind of growth we saw. But now all of these estimates have been corrected, right? Now, but these hospitals are now back to their original ARPOB growth of about 6 to 8%, which we find very sustainable. The occupancy rates are significantly healthy. They are higher than 40%. In the new hospitals which are getting opened up, also the occupancy rates are catching up. And the hospitals which have already become big, and even the smaller hospitals are opening a lot more, branches or a
Yeah.
lot more hospitals across the length and breadth of India. The other fact is that there's a lot of customer demand already. Right, India is, if you look at it, India is actually an underserved country from
Yeah.
from a hospital or from a need of medical perspective.
Hmm.
Right, we only have we need about 3.4 beds per thousand people, but we have only, or sorry, the global is 3.4 beds per thousand people, but India is only about half of that, right? So there is a lot of demand. We are seeing a growth in from a customer side as well, that like health insurance premium have gone up. There is a push from government side also, like Ayushman Bharat is a scheme which government has launched, which has like very high number of users, like in millions, and most of that is going into, and two-thirds of that spending is going into private hospital usage,
Yeah.
right? So we are very confident about the long-term growth potential.
Hmm.
While it saw that kind of a run up, and we are happy that we didn't launch the fund then. We were monitoring this market at that point in time, but we were not sure that will this rally kind of sustain.
Yeah.
And now that the correction has happened, now that market has normalized the stocks to a steady growth, we believe that can be a part of a good, this fund can be a good satellite portfolio from a long term perspective, because we are seeing a good bonus with a good structural growth in this theme.
And when you say long term, how would you define it? 5, 7 years
Yeah.
or
So
longer?
thematic, I keep anything is more than 5 plus. In fact, more closer to 7.
Yeah.
From a diversified equity, anything between 3 to 5 is good. But sectoral thematic, you participate for a long term. Like if you are investing in a railway stock, government is doing a lot of activities with bullet train and Vande Bharat and so
Yeah,
on and
so
so
many
forth.
trains
Yeah,
coming. Like we are
yeah.
almost doubling our capacity, if I'm not
More
mistaken,
than
or
that.
more than that.
Yeah.
Yes.
So there are big plans by 2037. What will government do? Right. So ये जो basically this kind of themes that they play out in long term,
Yeah.
right? So you have
They're
to
literally structural shifts, as one
yes,
calls them.
structural shifts,
Yeah.
and that is where most of the money is made, right? So you don't invest, make it a part of a satellite portfolio, be very disciplined about it, consult your financial advisor, but start allocating some money. So do it for long term, because when this leverage will kick in, like in hospital we are seeing a lot of operating leverage now, and when that will kick in, and the kind of structural growth you will see, it can be good from a overall wealth creation perspective.
And let's also talk about, some of the free cash flow generation at these
Yeah.
hospitals, right? Because
Yeah.
a lot of stocks to grow healthily and over a sustained period of time, you need free cash flow generation.
Right.
So do you think fundamentally something will shift in like how profitable these hospitals are?
Yeah, yeah. So, see, maybe the PBT levels, PAT levels will continue to remain the same, but because these hospitals are generating a lot more cash now, what they were, the profit levels have increased significantly. This will go back again as capex. Like again, I'm talking at a Uber level, it will
Yeah.
vary very differently from each stock to each
Of
stock, and
course. Yeah.
that is why you invest in a theme, because you are not taking that risk of what will happen to one particular stock, and it will go as back as capex. It will go in opening more hospitals, and slowly and steadily the occupancy rate will increase, the RPOB will continue increasing, and start adding more to the revenue and profitability of this stock. So that's why we believe it's from a good bones in this theme is what we're seeing.
Yeah, that's a good way to think about it. And
Yeah.
thank you for explaining it to the audience because, one often thinks about, I think themes in general have a very negative connotation to them.
Yeah.
People have this memory of like real estate
Yeah.
themes not performing back in 2007-8 period, right? And
Yeah.
like there are themes which, sometimes became flavor of the market but didn't
Right.
end up performing
Yeah.
well. But I think these kind of structural themes are definitely, one can't say definitely, but,
Yeah.
are more likely to perform compared to others for
Yeah.
sure.
So this is basically, see, I would suggest investors not to trade. If you want to trade, there are stocks, of course, but
Yeah.
this is a theme in which you should invest for long term and do like an SIP, or again, consult your financial advisor. But these are the themes which have a very strong probability of playing out in long time, because the thesis of this is playing out. Like we are seeing a lot of tailwind from customer demand, from government side, from the companies who are operating. Those operating leverages are kicking in now, so that will have a continuous growth. In fact, as we were talking about, the hospital run up to the stocks was not completely unjustified, right? Like the only in the last 1 years these valuations have corrected or these prices have corrected,
Yeah.
but before that their profit have actually increased by 5x, right? It's just that now they're like the market have understood that they will not continue to grow at the same level at which they were growing before,
Yeah.
but still they will grow, right? So we believe that this can be a good potential from a long-term return perspective.
Yeah, when unrealistic expectations have gone out of the system,
Yeah, yeah,
probably
yeah.
the best time to
Yeah,
invest.
best time to invest.
But then, people might also wonder that why do an ETF and get exposure to 16 stocks? Why not just pick one or two companies which are brand names to back and, just invest in those?
So you can do that as well. But as I explained before, we believe that uh, single stock carries a lot of risk, right? Like if you're buying a single stock, you have to understand a lot of things around that stock. There can be things around it. You will become emotionally attached to that stock, and most people and that's why we are launching ETF and index in this, because we are realizing and we are educating a lot of stock investor that let's say you believe in India's hospital story. You believe that yes, hospital will grow in India, but you don't know what is happening. Are you, as like we are into market day in and day out, right? And will you be able to track that stock? If you are able to do that, then there is no problem. Invest in a stock. But if you want to invest in a theme, want your risks to be covered, bit more than what it will be in a singular stock, then invest in a theme. And that is what our whole thought process behind launching this thematic funds are.
Very interesting. And then, let's also talk about some of the other themes that you mentioned. You mentioned defense,
Yeah,
EVs.
yeah,
Defense has also seen such a crazy rally from,
yeah,
being less than a billion in terms of market cap, all the companies
yeah,
combined, to now accelerating over the
yeah,
last 2-3 years. It's been crazy in terms of ride.
yeah,
So, at what point did you launch the ETF and, how has it
yeah.
performed ever since?
Yeah, so defense we launched in October last year. So about 1 year, 4 months back. Since then, of course, the returns have been decent. It is up by about 18, 19%. But there was some volatility in the ETF. It went up very drastically. Then it came down, and now it is going up again. But again, this is not about, we believe that defense is a long-term growth story for India, right? A
Yeah.
lot of things have changed. There was HAL, there is solar industries, a lot of defense companies have started doing well. Indian government has, while the defense spend was a lot, but a lot of this has now started to become indigenous, right? Like we are building capabilities inside India. There is a lot more production which is happening. They have an order book for the next 5 years, right? So we are very confident about defense, and of course, the geopolitical, what is happening. So defense as a theme, we don't see that it is going to go away anytime soon. And these companies have good bones and good structural growth theory behind it. EV, we are all aware what is happening, right? Like there is a strong growth in both two-wheeler EV and four-wheeler EVs in India. Government's objective is to have, I think, four-wheeler or two-wheeler, one of them is to have 30% market share of EV by 2030, right? If that has to happen, EV market will grow. And we are seeing this globally, right? In Scandinavian countries, EV market share is more than 90%.
Yeah.
Now, for EV to grow, if EV is growing, then you should have a theme in which you can invest in EV, right? So that's why we launched an EV theme. Power as a sector, there is a huge power demand, like electricity demand is huge in India, right? So there are three type of companies which operate in power sector, which is generate electricity, then transmission from the point of
Yeah.
generation to the point of usage, and the third is distribution. So are you able to capture this entire supply chain of power? So we launched a theme for that. And now the latest, we also launched metal, but we launched only ETF just about a month or so back.
Okay.
From that time itself, it is up by 20%. And I'll not take the credit. We, of course, like timing is not something we can completely control,
Yeah.
but we believe that growth is there. And that is why we launch those funds. So hospital for us is more like a long-term growth. We believe that fundamentally things are happening well in this bunch of stocks. There is a lot of tailwind from all the angles we can think of, and it's a good gives a good growth opportunity for investors to diversify, at least as a part of satellite portfolio.
Varun, I would also like to understand, what is the good time to invest in these thematic
Yeah.
funds, right? Because like when you launch it, obviously you also need as an AMC to garner some trust around it, and it takes you time in terms
Yeah.
of, building out the
Yeah.
story around it. But then, by the time some people enter, maybe the rally is already played out, or,
Yeah.
in that 1 year, 1.5 years, the story might have already played out.
Right.
So how do you think about it? And
Yeah.
can one enter at any point?
See, we are in the business of creating wealth for long term, right? We are not launching any product to give you returns in short term, right? It might happen, it might not happen, right? Like it happened luckily for us in metal. It happened silver actually. When we launched is when the silver rally picked up.
Yeah.
But the idea is always to get people to invest and invest for long term, right? And launch only those products where there is a potential to create wealth over the next 5 to 10 year kind of horizon. So when you're looking at such a long period, the timing does not matter so much. But still, if you want to time, you can keep it on your radar and enter at the time where you are comfortable with. But we believe ki these are not like these are more structural growth story. There might be some more correction. There can be growth from here. But look at it from a long term perspective. Start allocating some money in especially now. Start doing it in a phased out manner. And then you develop your own comfort with it and invest over a period of time.
And then, people always ask me what is the right time to sell,
Yeah.
right? Like a lot of them have maybe got exposure to multiple SIPs.
Yeah.
And, some people I talk to are doing like 10, 15 SIPs, which I wouldn't advise anyone. But like, some of them have started SIPs because sometimes they might get excited about something they heard from a friend, or, some investor making a decent sized return in some industry. And that's when they start doing SIPs.
Yeah.
And then they are always wondering that should I get out of it or should I continue in it? So people don't really know. So what are the signals that one should keep in mind that, a theme might have played out already, or, this is probably something that you should stop, or do you continue indefinitely?
Yeah. No, so definitely not continue indefinitely.
Yeah.
You always, so the principle which I follow, of course, it can vary investor to investor, always saying with a caveat. I look at my portfolio after every 6 months. My portfolio, my wife's, my parents' portfolio. I look at how the fund has done. Has fundamentally anything has changed in that fund? Then I also have a financial advisor. Then I talk to him to understand what has happened in that fund. Sometimes the fund manager changes. Sometimes the AMC thought process changes. Right. So I'm very cognizant of that. Right. What is happening? Has there anything fundamentally which has changed? If nothing fundamentally has changed, then I would continue in that. Or is the thought process aligned with my thought process, right? So, and what the financial advisor also advises, actually I would say is 80% is advice, right? And that is when I stop. Is nothing to do with what is happening in the market, right? Market can go up or down. Like there are some funds in which you can, of course I won't name, but there are some funds in which you can decide to stop SIP, or there are some funds you can decide to sell depending on what your financial advisor is advising as per your risk return profile. But you should, this is actually I would say is the best time to continue investing, but select your funds correctly, right? Do not just do it indefinitely. Invest in the market, invest, but select where you are investing in very smartly, in discussion with your financial advisor. That is important.
Yeah, like, a couple of fund managers who've been on the show, for example, it's a competitor, so I won't name it, but he was basically saying that, we launched a fund 22 years ago, and literally people who stayed invested from the start of the fund to the end of the fund have been just two people in the thousands of people who had invested, because people withdrew at different times and they didn't actually benefit from the fund cycle, where, they didn't stay invested for 22 years of the fund, where their returns could have been amazing, right? And they exited at different times. So what are some retail indicators for retail investors to think about that, okay, maybe this is a good theme to play out, because people don't always have the right financial advisors guiding them, and some people might be doing it DIY because they watch podcasts and they look at something on Twitter, and that's how they start investing. So are there any signals that you can still point out?
So most important thing actually, so see, I want to correct this, tell you one thing. See, I don't believe in this that there's a 22-year fund, so you should continue to remain invested, right? These are good for stories, but this does not happen practically, right? Like, no one, if you are not doing well as an AMC in terms of return, customers will choose and they should choose another AMC, or there is fundamentally which has changed. So in the last few cycle, like last 22 years, many things would have changed in that fund, right? Like fund manager would have changed, or AMC would have gone through a different cycle. Like if I am a value investor, but that AMC has become a momentum investing, why would I continue to remain invested, right? So those are the kind of things which basically talk about your money should continue to compound wherever you are investing in is what is more important.
Yeah.
So I'm not in a bracket of people saying that invest and then forget about it. You should continuously monitor your portfolio. You should talk to your financial advisor, monitor it every 6 months. 90% you will not make any change, but that 5 to 10% which you will keep changing can create a lot of alpha. Now, if you're doing it DIY, if you're even talking with your financial advisor, there are few things which you can change. A few things which you can talk about. Of course, talk about returns, right? Because returns are the core thing. And what has changed? The returns are down, or if my returns are not happening, what is the reason behind it? Has something changed in the fund house? Something changed in the specific scheme? Something changed in their thought process? Those are the kind of things you have to be aware about. And depending on that take your call, right? Like it cannot be purely, so I would say it's not purely objective, like it's not purely quant driven,
Yeah.
and that's why you can't, most people are not able to do it on their own. I would say that investing is more art than science, and
It
that's why you
is.
also need a financial advisor who has a lot more data, but also understand your psyche, can be dispassionate about your money, and then guide you in the right direction.
Yeah, absolutely. I agree with that because, there is this whole narrative about staying invested for 20, 30 years
Yeah.
with times and things changing so fast and rapidly
Yeah.
and innovations coming in your face. You probably can't, right?
Study your
And
portfolio, like
yeah.
be married. See, like for example, like I check my portfolio every 6 months, but I check it
As
every
grow,
day.
I don't know how you do it because I'm checking it on a very regular basis. So
Yeah,
as
yeah.
someone who's heading the AMC, it's very commendable that you're saying that you check it
No,
only
I
six.
check it daily,
Yeah,
but the calls to do anything, I take it only in 6 months, right?
sure.
Because you have once you have invested, it takes you some time to understand what is happening. Is it in the right direction? Is the company doing exactly what it has promised? Is the fund doing exactly what it has promised? That is the most important thing, right?
Yeah.
Right. So those are the things I monitor.
Yeah, and also Varun, I would love to ask you about this whole international theme of investing,
Yeah.
right? Now there are so many fund houses that are launching these gift city structures or promoting international investing, or saying that you should not only look at US but look at also global markets in general. What is your view on this international investing theme? Because this narrative has been really being pushed hard to all investors.
Yeah. See, it is good for investors to do it. Like especially in market like last year, right? If you had some exposure to US market, you had lesser exposure to INR, and INR depreciation would have not hurt you so much. And there the markets have also given better returns. So it's always good to have some exposure to markets, right? But you have to understand that globally also markets operates in cycle, right? So while last year was not good for India, it's very likely that going forward it can be good for India, while it's not good so much for the outside countries. Europe has been, has been tumbling for such a long time,
Yeah.
but last year has been very good for them, right? In some of the countries there. So I would suggest it's actually quite complicated, which market you go in. You will need an advisor who can suggest you. You need good funds to basically do that. So if you're just starting, I would suggest that US can be a good place to start. But there also markets are at an all-time high,
Yeah.
right? It's not like there you will find a lot more opportunity, and if you're chasing returns, then you will fall more. The chances of you going wrong are higher than you going right.
And all driven by the Mag 7 or 8 stocks, right? Like
Yeah, there
majority of the
a lot of
returns.
hype in terms of AI,
Yeah.
and so those things are happening. There is a lot more. See, the way I think of it from an economy perspective, there is a lot of liquidity right now in US, right? And whenever there is a trend which comes, the money starts flowing in that direction, and the narrative starts getting built, right?
Yeah.
It's gotten built for AI, now a bit for silver, right? And some of this just becomes disconnected with the reality,
Yeah.
right? So don't chase momentum. look at it from a pure asset allocation. So my comfortable asset allocation for myself is 5 to 7% outside, not more than that. I still believe in India's growth story. I believe that India has a lot more potential to grow from here. US, I usually take only because they have this technology companies which are much more mega caps.
Yeah.
Right, US market is at $60 trillion in market cap. We are at $5 trillion, so we still have a lot more room to grow. But they have some companies which have very good, structural, like very good bones, very good long-term structure potential. So those are the companies I basically take exposure in via a fund or directly via stocks. But otherwise, I am a much more believer in India's growth story. Much more comfortable keeping my money in India.
Yeah, but that can also be like our own bias, right?
Yeah.
We feel more comfortable investing in India, and I call this show the India opportunity also. So I love that you said that. But the fact is that there can also be a bias associated with it, right? And when you only focus on one geography, then you are sort of putting yourself still
See,
at risk.
I would actually see, if you look at it from the way we look at India, as I talked about, from a diversity of customers, the diversity in stocks or diversity in the kind of asset is significantly higher. See, like for example, in gold and silver investments in India, they are also growing because there is a rupee depreciation.
Yeah.
Right, so that advantage you are getting in commodities. So if you are doing the right asset allocation, you need to have some exposure to US depending on what your risk profile is, how much LRS you want to do, those complications while filing taxes and so on and so forth. Right, but in India, it's not single geography. Right, there are multiple companies, and India will continue to remain a market in which fund managers can create alpha, AMCs can create alpha, because there is a lot of structural growth which is happening in some of the companies. Some companies, there is some re-rating happening. For example, small cap we launched, we are very confident that this will be a very good uh, uh, wealth creator in the next 5 to 7 years, because very good stocks are available right now. There are fundamental shifts which are happening in small caps. The smallest small cap about 10 years back was 4,000 crore, which is now at 25,000. Sorry, largest was 4,000, now it is at 25,000 crore. So 7x the stocks have grown. So we are very confident that India has a good diversified opportunity, and we are comfortable investing in India.
Yeah.
But can have some exposure to US, largely in mega cap type of companies, which will continue to exist. So, for example, Google has such a alphabet,
Yeah.
has such a strong presence everywhere that it is not going to get disrupted overnight.
Yeah.
Right? So you can have some presence there, but the kind of growth which you can see in India, we don't feel that you can get it anywhere outside of India.
Yeah, absolutely. And this is a good time to ask you actually about passive versus active, right? Because like you said, in the US, a lot of it is under advisory, but a lot of it is in passive
Is it
also,
passive?
right?
Yes.
And Vanguard, I was reading some numbers. I think one of the biggest in terms of, AMCs that holds the passive investing bit. But in India, we are still seeing, like, people are still questioning, active versus passive, or which fund managers to choose. And there is a cult-like following for some of the fund managers, right? Because people do believe that outperformance is possible.
Right.
So having seen it from both lenses, as someone who sees ETFs, indexes, and also active funds, what is your view on it?
Yeah. So that's a very good question. See, in US, one important point is, while passive is growing, but there's a lot more other factors to it, right? Like the way funds are managed there. Like in India, in an active fund, if I am doing any portfolio reshuffling, in the taxation, there is no taxation. Like investors do not get part of the taxes. While in US, it is so.
Yeah.
Like if you're investing in an active fund and they do anything buy or sell in their active portfolio, customers have to pay those, like the investors in that fund have to pay the taxes, which is a lot of hassle. But that does not happen in a passive fund. That does not happen in an ETF. So ETF operationally also is much more comfortable for people to invest there.
Yeah.
And as I said, the advisory over there is still 76%, like 76% of the AUM is still under advisory. The structure of advisory over there is so that advisors can advise on passive funds and earn a livelihood. While in India, it is a little different.
Yeah.
So, coming to that point and understanding investor psyche, India is a very diversified country. There will be people who would prefer passive investing. But we as an AMC believe that passive investing has to be in themes in which you would like to invest. Like, for example, if you're investing in a Nifty 50, we believe it's better to invest in a good large cap fund.
Right. Yeah.
We don't we believe there is a sufficient possibility to create alpha, and that is what we are striving to do, right? We are not saying that invest in our fund, but find out a large cap fund who can beat a benchmark, right? Even 1 or 2% alpha over benchmark
Yeah.
over the 5 to 7 year can create a lot more gains in your portfolio versus the index, right? So don't invest in a nifty small cap 250, right?
Yeah.
Invest in a our fund manager, like we like to call it, that investing in a large cap index makes some sense. Investing in a mid cap index is okay. Investing in small cap index is completely nonsense, right? So you there is a lot more potential to create alpha in India, we believe, across the market caps. So invest in, when you're selecting a passive fund, select a theme is what we, and that is how we have structured our AMC and our AMC products as. Select a theme, invest in that, because you will not get a thematic exposure specifically in a diversified equity fund, right? Like if you want to invest only in hospital, some funds will be buying a hospital stock, but it's not a core hospital allocation
Yeah.
which you would like to have. So use that passives for your advantage. But for others, we personally believe that diversified equity funds are the way to go, and there is a lot of opportunity to create alpha in India.
What an optimistic note to end the episode with. I think, Varun, thank you so much for being here. I think you gave our audience a full sense of, what's possible in terms of the universe that exists, not only within Groww, but also how to think about certain asset allocation, portfolio construction, and thinking about themes as well. And I personally learned a lot, and I wish you all the best. And I continue to be a customer of Groww. And now that we have you as a backer, thank you for being on the show. And I really appreciate you taking the
Thank
time.
you so much. I love the conversation. Thank you.
Thank you. Thank you for tuning into today's video. I hope you found this conversation useful. As I always say, I'm not building a podcast, I'm building a library of conversations that will last the test of time. So, hope you took away some fantastic nuggets and wisdom from it. And please remember to subscribe to our channel. It really helps us in bringing you better and better content each time. Thank you for watching.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.